David, let's talk about where risk is at the moment, because we got this blockbuster news. We don't know what the president's intentions are on transition. Senate controls not for sure. We still got to get through the fall. We got new mandates out of Utah on masks and New Jersey making some limitations on indoor dining today. So where are we?
You have a lot more clarity today than you did a week ago. You have the presidential election is essentially decided. President-elect Biden is going to be the president. That's point one. We were hopeful there would be a vaccine. The Pfizer news today is very significant. It's going to happen, whether it happens in December or January. This is a huge first step. So it takes a lot of risk off the table in terms of the economy. We're in a recovery mode on the economy front, and we think that continues into 2021. So these are all great for humanity and also very good for our financial markets.
Tony, I've still seen some notes today that say, you know, the market may still have some good licks in it before year end. Do you think that's true?
Yeah, I mean, I think we'd start with what David said. I agree with David 100% that a large amount of the large systemic medium to long-term risk has been taken out of the picture. Having said that, there are definitely some shorter-term risks that can create volatility. A lot of them are on the political side of the equation. And I'll start with the new administration and with the makeup of the Senate. So coming into the morning this morning, let's remember that futures were down. That's been lost in the noise of the vaccine. The reason they were down is because I think the market was reckoning with the fact that there was a not immaterial chance that the Democrats might actually get the Senate. Now it's a fighting chance. It's not a great chance, but the chance does exist with those 2 seats in Georgia. On top of that, we still need to see what kind of cabinet President Biden puts together and how progressive he's going to be in his approach, even apart from legislation, just in terms of running those major departments like Treasury, Labor, et cetera. So there are risks there. There's also risk around the virus. There's risk around the parabolic increase in cases and whether we overwhelm our hospital system and have people respond to that in lockdowns. And then, of course, there's risk around the possibility of more fiscal stimulus. And frankly, the vaccine increases that risk. So in the short term, there are risks. In the long term, or medium term, I absolutely agree with David. We're on a much better path.
David, it seems, following up on that, like, first of all, we're probably a year out from mass numbers of people being vaccinated based on what we're hearing at this point. And why would the futures be down on the prospects of the Democrats possibly taking the Senate when a couple weeks ago the markets were supposedly booming on the possibilities of a blue wave and more stimulus?
Well, last week you had a very significant rally, like 6 or 7%, on the expectation of a Biden win and a split government. If the Democrats were to take the Senate, there's more uncertainty about the economy in terms of the banking group and regulation and taxes. Net, we did a study that looked at 1946 to 2019, and overall the market actually does a little bit better under Democrats. If the Democrats control everything, it's good. If the Democrats control the presidency and the Republicans control the Senate or the House, that's actually been the optimal economic scenario for the stock market. So the net is, regardless of Biden victory and a sweep, it's good for the stock market overall in the economy. And if there's a split, it's actually a little better for the stock market and the economy. We would not be changing your asset allocation based on the Biden victory.
Shepard Smith here. Thanks for watching CNBC on YouTube.